Okay, hello, welcome. We're recording here. I'm Drew Hornbein. I'm with Better Together, and I am sitting with three experts in their field. We have well, why don't you just each introduce yourself, starting with Miss TJ.
Hi, I'm TJ. I'm an accountant based in Denver, Colorado. And I offer automation of bookkeeping services and just helping people out with a little bit of business coaching as well.
And I'm Boy TJ with Shazam Accounting, doing the same thing for my clients. And we just wanted to make ourselves available as a resource.
And I am Laura Ring with Cloud Tax Matters, and I work on the tax side of things. I don't actually do any accounting. And when I do need any of those kind of questions answered, I reach out to either of the TJs, and they get me out of trouble, and work on both business and individual taxes.
Awesome, perfect. So what we're going to do is we're just going to go through and answer some questions that people are going to may possibly have. So I want to start just by really exposing my ignorance here. Can we just lay out for our audience what are the, there's W-2s and there's the state and the federal taxes and there's 1099s. Can we just give me a lay of the land of what my taxes as an employed person and then my taxes as a person that does contract work look like?
Sure. So typically, if you are a W-2 employee, that means you're receiving a payroll, and they recently did away with being allowed to have any expenses deductible against that. So now when you get a W-2, even if you have to pay for out-of-pocket lunches, or you're paying for your own mileage, or you're working from home or anything like that, you don't get to take any expenses. When you receive 1099s, that tends to mean you are a consultant. And unless you've made an election to treat yourself as a special and separate business entity, you're going to be what's called disregarded for tax, and you're going to file that on your personal return on a Schedule C. And the personal return and the Schedule C and all the other forms that go with that are due April 15th, and we'll talk about the payment implications of that in a minute. But all of those forms, 1099s and W-2s and many of the other forms that you receive, are all also sent to the IRS. So it's always really important that you make sure you review those and make sure they're accurate, and then you put them properly on your return, because the IRS is going to know what they've received for your name. You're going to put this, and if they don't match up, you'll get a lovely love letter saying, hey, these don't match up, and it's really easy math for them to do. So that's a really, really important thing to make sure that you get right and you include them all.
Great. Anything to add, TJs?
Nope, that's good.
All right.
And I think both the TJs, you guys help your clients file 1099s when they need to issue them. Is that right?
Most
that
definitely.
That was due back in January. But if you didn't know at the time, or you didn't get a chance to do it, you should definitely still file those, because it's better to do it than not, even if it's late.
Mm-hmm. Great. That's a good. File those 1099s even if you're late. I make
and
that.
So for the contractor, when you haven't received a 1099 from someone that you've done work for, it's important to contact them and ask them what the status is, because if they submitted to the IRS and you didn't get the form, and then you file your taxes without reporting that income, you'll get into trouble.
Mm-hmm.
Just better to start tracking everything and keep everything straight on your end, and using a great product to do that.
That's right.
We'll get to the plugs a little bit later. Okay, so thank you for the lay of the land. Let's now look at the deadlines. You talked about we're going to have to file our returns, but I've heard that there's extensions. What is going on amidst this changing, ever-changing crisis that we're in right now, and what implications does that have on our taxes?
Right. So the pass-through entities, which are scheduled S corps and partnerships, are due March 15th. So if by any chance you were confused and didn't realize that was due at the time, you should file those as soon as possible, even if it's just an extension. Personal returns and C Corps are due April 15th. And this year, the IRS is doing something different in that they are giving you an extension of time to pay as opposed to an extension of time to file. So usually you always have an extension of time to file, but never to pay. They want their money by April 15th, no matter what. Because of the uncertainty with the economy right now, they are actually still requesting that you file an extension, which is very easy to do. You can do it for free on their website. You can ask your tax advisor. It's very simple to do that, just to let them know that you're around and you will be filing. But you don't have to pay any of the money from your 2019 taxes that you still owe or from your Q1 estimates until July 15th. And that's a really nice 90-day extension for us all to figure out what the world is going to look like in the next 90 days and how we want to react to that. So that's a big push. They'll waive all the penalties and late fees that would normally be applied, and you get to hold on to that money and use it to fund your business or your personal family needs or whatever. There are exclusions, which I doubt most of us have to worry about, but if you owe more than $1 million on your personal taxes or $10 million on your C Corp, you do need to pay that amount over that. So for any of you that apply, by all means pay that. But that's but the rest of it is a great extension. Colorado is going to follow the feds, but the place that you should check, and the thing that's really different in every county or city, is most of them have not yet announced whether they'll extend. So if you owe a city tax, the Denver OPT, a sales tax and things like that, employment taxes, all of those still need to be paid on a normal schedule. Any of those, what they call trust fund taxes, where you receive some money from somebody else on behalf of the government, you have to pay those still in the regular schedule.
Great. So check in with your localities. In Colorado, they're following the Fed, and the Fed is giving us till June 15th?
July 15th.
July 15th.
Yeah.
July 15th to file our 2009 and our Q1 estimates.
Right.
Awesome. So I want to go back to the Q1 estimates. This is a time of a lot of uncertainty, and you made in our pre-show, you made a recommendation about holding off, sort of exchanging the penalty. Or can you just go back onto that for the quarter, and maybe give a little background on what Q1 filing means?
Yeah. Sure. So, and if you're using, any TJs or somebody else for your accounting, you're probably going to know how you're doing for the year. Most people are anticipating in certain industries that things are going to slow down dramatically, hospitality and a whole bunch. And what we don't know is how things will bounce back. And when there's times of uncertainty in your industry, whether it's because of a global issue like this, or it might be, a resource issue or whatever it is, I always recommend to clients that if they want to hold on to cash and they aren't, sure about how things are go, to maybe think about not paying your estimates when they're due. And the IRS, believe it or not, is pretty flexible on that. The interest rate that they charge you is much less than most credit card companies and other sort of small business loans. It's a little less than 5%, and it's and the state also has a rate, and that's usually about the same. But in a time when you need cash, that's a pretty small amount to pay to hold on to it. And you can always, at the end, there's a lot of strategies on, with payroll, doing something and having a lot of withholding get paid in. There's ways you can get it right if you know you need to pay, even making your Q3 or Q4 if things start to look better. But just right now, if you think you're not sure how the year is going to go, don't even worry too much about that first quarter, and you can wait and make it up. Now, you always want to pay your taxes timely by when they're due. So that this year would be July 15th. Next year it would be April 15th. The penalties after that are almost 25%, and that's crazy. And they start to get kind of following you for that. So I would always do that. But those underpayment penalties, it's a great way to kind of fund your life or your business when you aren't sure about what cash is going to look like.
Great. And yeah, so every quarter, as a independent contractor like myself, I'm someone who isn't paying into the taxes. I am estimating how much my taxes are and then paying that to the IRS every quarter. And if I'm uncertain, I'm like, I don't know what's going to happen. I really need to keep this cash that I have. I can hold on to it and just like pay it back later.
Exactly. Yeah. And the other thing too is there's a way, it's called an annualized review when you go to put your income in. So if people really have bad Q1s and Q2s, which for some industries that's definitely going to happen, you shouldn't be making that much anyway, because in the end of the year, we can figure it out. And there's a way when we do your taxes that we can actually make it so the penalty is even less. So that's definitely something, they're pretty flexible on that. And the other thing too, if July 15th comes and things are worse than you anticipated and you can't pay your 2019 taxes, don't stress. They have a super easy way to get an installment agreement. If you owe less than $50,000, you can actually online sign up and push it out over a number of years. So always kind of stay in contact with them and take advantage of all the options. Don't just go into hiding and not pay or not file or not talk to them. Just get it going. And my sense is with the economy, they're going to be very lenient on that. And if you need it and you want it, you can get it. And that interest rate is very low too. I think it's like 2.3% or something. So it is almost a no-brainer. If you don't have the cash, hold on to it.
Great. That's great. Yeah. Always I mean, that's the golden thing that I have definitely run away from it and paid for that. Yeah, just getting out in front of it and asking extensions, knowing that that's possible. Okay, so staying on taxes, they're local taxes. I know a lot of our viewers and people are in the Denver area. Can you just explain the OPT tax for Denver City?
And TJ, I think you actually file those for some of your clients, or you have it set up to go through Gusto. Is that right?
Mine do not go through Gusto for my my single member LLCs because they don't really have a payroll service. But it's super easy to go online and do the eBiz filing for Denver. You can register an account super quick online. You go in. The return is pretty easy to file yourself as well. I'm thinking of maybe even doing like a little tutorial for people because it is super easy to go in and do it. It's $4 per person per month, I believe is the total. So yeah, super quick, but you can go on the City of Denver's website and register for an account and just file it there and pay it there. But yeah, if you're in Denver, everyone has to pay it. Even if you don't have employees. So, and if you do have employees and you are going through a payroll service, not a lot of my clients are on payroll services. A lot of Mr. TJ's clients are for sure, but your payroll service will handle that for you, provided you're paying yourself a paycheck through their service.
And so like for me, I have an LLC, single member sole proprietor LLC that just passes through to my personal, but I still count as an employee, and thus I have to pay that $4 a month.
There's a section right at the top, and it's how many owners. So it'll say list the owners and the months you've been in operation times 4. That's how much you owe.
So here's a question. As you know, I have my MetaModern, the Drew Hornbein business, and then I also have Better Together. I am the owner of 2 businesses. Am I paying twice for each of them?
There's a threshold. So if you're making over $500, I believe, I think you have to.
Good to know. That's maybe setting up a bunch of LLCs wasn't the right move this year.
No, it is though, because you don't want to mix too many businesses under an LLC, right, Laura?
Yeah. I would say respect the entity. So if you're doing different things, you should have different entities.
Respect the entity. I love it. But yeah, a lot of people that I talk to are just like, oh, I already have an LLC. I'll just do it under this LLC. No, don't do that. Don't be mixing services and things like that. It's hard to track. I have a client that half of their business is taxable for sales tax they have to collect, and the other half isn't. So there's actually two separate entities that share workforce and everything, but the sales taxable items run through a different entity, and the ones that aren't sales taxable, they run through a separate entity. So I mean, you want to keep things divided for sure.
Good, great. And speaking of keeping things divided, we are entering into a wacky time where people are not going to work, or they're not going, maybe they were in co-working spaces, but people are starting to come home. And I think there's a lot of people who are now going to have home-based home offices. And I'd love to get the lowdown on home offices, people thinking ahead for taxes in 2020. What's the deal with the home office?
If you're an employee of another company, so say your company is shut down and said, okay, everybody, we need you to work from home, and they're setting you up, there's really no deduction you get for that, because they took away all those, what they call the 2106 deductions with the 18 reform. If you are a consultant, and this would be an interesting time, if you maintain your, say, WeWork or other shared space, and you're still paying rent there is a concept where you can't kind of double dip. So you can't pay rent to one place and then also say, I have a home office. This is kind of a unique time, though. So, you know, I could see the IRS being really lenient on that. If you can get out of your WeWork for a while and you decide, hey, I'm not going to pay it, definitely you could take the home office. But I would almost say you could just include, like, say, for those 2 months, they have a standard office deduction, which is $5 for every square foot that you're using that's dedicated. And I would kind of put that in as an additional amount, and, you know, just kind of know it was sort of a one-of experience. Now, if we all find that we're working from home longer and this becomes a more permanent thing, they'll definitely come out with some guidance on that, because that's going to be a very common question and a very common need. But my sense is for a couple, you know, if you're home for 3 or 4 weeks, just, you know, kind of put it in, be reasonable, and then, you know, we'll see if they come out with some special guidance by the end of the year. Great. And they did change and make it easier, just like you can do with the mileage deduction, where you take a certain number of cents per mile. You can actually do that for your home office deduction now too. So it's $5 for every square foot that you use. And that way you don't have to do things like calculate depreciation and kind of do all of these other things. You could just take the straight number, and it's really easy. Most of the tax softwares and things like that just make it simple for you to put that information in, and it just gets done really quick, and you get that benefit.
Great. And TJ's, can you fill me in? I know there's some rules.
You don't have a home office, Drew.
I have bed in my home office, so
unfortunately you don't have an home office. You can't have your desk in the corner of your room and call it a home office. You can't have your desk in your living room and call it a home office. It has to be 4 walls with the door that shuts, and it has to be strictly used for business. So technically there's no storage going on in there. It's just for your business use. Unfortunately, that's how it goes. I did toy with the option of emptying out like a walk-in closet and putting my desk in there, but I kind of like having scenery, so I don't know if that would work.
Okay, that's also very good information.
Yeah.
Any other tips on home offices or things like that?
Nope.
That kind of covers it. Yeah.
He's not offering his off record.
Yeah, no, this is the on record.
Yeah, the counsel that has been given is good.
Okay, so I've got 2 more questions. Second to last question is, how do you file? I know that you as accountants, you know, and we have a CPA, and y'all do filing for people, and can we just go through, I guess starting with, like, I'm a W-2, everything's been really easy. You know, they're probably not watching this because they just go and file it on whatever. But what about, you know, a consultant who isn't doing anything, doesn't have like separate business entities, is doing very straightforward 1099 work? can they file on their own? What are your recommendations around that?
I am a proponent of hiring a professional always, because as much as I know accounting and how to make sure I'm tracking everything correctly, taxes change all the time. And so I could be missing something. At the end of the year, a couple years ago, when the meals and entertainment switched up, I was asked to divide those out for my clients. And that happened. I wouldn't have even been on the radar to receive that information because that's just not what I'm doing. So I default to hiring a professional all the time. When I was younger and I was working just one job and I didn't have clients outside of that, and I didn't have any other deductions or anything that I could take. Yeah, super simple. But yeah, now I want to use a professional personally.
Boy, TJ, what are you going to say about that?
I do recommend using a professional. At least have a conversation, whether that's with you, Laura, or with someone else that they know. A lot of times what looks easy on the outside gets complex when you get into it. And so to save yourself the headache of trouble down the road, it's always good to get somebody else to give you input.
Mm-hmm.
Okay, but there are people out there who are they're inquiring minds. You're all professionals. We should hire you. But if we don't,
I don't hire me to do your taxes. I don't want to.
I don't want to do them.
I don't want to do your taxes at all. And I don't want to look them over and I don't want to give you a green light that you're good to go on your taxes. Not at all.
Yeah.
But there are programs that'll help you. TJ knows one. Tax Act.
Yeah, and then
Yeah.
TurboTax says everyone's an accountant. I haven't proven that yet. Everyone's a tax person. I feel like that's a stretch.
Yeah.
presumptuous.
If things aren't super complicated, maybe go that route. But
yeah, Laura, you speak to the parameters. Like, when should someone pick up the phone and contact an expert?
Yeah, and I haven't used any of those softwares, obviously, for a really long time, so I don't know how they've evolved. But the things that I worry about is, this thing called a qualified business income deduction, which is available to certain businesses. There's lots of rules around if you have more than one business like Drew and one makes a lot of money and one doesn't make a lot of money, how do you net those QBIs? If you're service versus a business or trade, those are the things that I don't know how the software handles really well. It's pretty complicated for those of us who do this all the time. And I'm like, how does a software make those determinations? So that's what I don't know. If you have a straight up W-2 and a couple interest statements, and probably most of us are not even itemizing anymore, I think using one of the TurboTaxes or TaxAct is probably great. I think I saw a couple of them have people who will review it for you as part of the service, and that's probably a great idea. But I just, I know when I review a return, I look at the prior year and I figure out the holes and I see the differences and I ask a lot of questions, which I don't know if people want that or not, but I think that's a really important way to make sure you're getting it right. And I just don't know how those softwares do that. So I think all of us try to keep our rates pretty reasonable so people are using us, but it's just a choice, I think.
Great.
And also just to speak on that, I know Laura operates her business the same way that TJ does and the same way that I do. And we look at everything holistically, and we want to be more intimately involved. And for me personally, I want to work with other professionals who want to be intimately involved with my business that way. And just knowing the ins and outs and things like that, you're going to get a better result if you do partner with somebody to do something like that versus just like one-offing too. So.
Perfect. Thank you. I mean, I certainly am going to be bringing y'all my tax business because I need some of that holistic loving. Okay, so final question. In these times, we are lots of people are stepping up. They're helping their neighbors. We're finding that we maybe don't have a lot of work, but we see a lot of need in the world. There's a lot of I've been seeing a lot of activity in the circles of mutual aid. That's like help, getting help and receiving help and giving help, and you know, neighbors helping neighbors, the very like Americana kind of thing to do. What does talk to us about pro bono work? And I know that we discussed a little bit about doing service work pro bono and then donating stuff. And can you just like give me a little outline of what implications are there?
Sure. So the first thing to remember is that the only deductions ever available are for qualified charity. So as great as it is to be neighborly, and maybe you got some of that coveted toilet paper and you're giving this to your neighbor and you're like, this is really worth $100 for this package. Because your neighbor isn't actually a charity, you don't get to take that as a deduction, even though you're giving a good or service. Now, if you take that same package of toilet paper and you go down to the food bank and you're like, hey, I know you guys probably can use this, here it is, that's actually a deduction you can take. When you give your time, you know, a lot of the music stars, like I think John Legend and a bunch of the country stars have all been doing these free concerts. You know, normally they'd probably get millions of dollars for doing one of those concerts. They can't on their return say, oh, I did a concert, I'd normally get $2 million. I'm going to take a $2 million deduction. It doesn't work like that. It's because they've donated services. The IRS doesn't allow you to take any deduction for that. So when you donate your time to help a nonprofit, maybe even with their accounting, or what I do for taxes, I help a nonprofit with their taxes. I don't get to include any of that on my return, even though they're charitable. So it's goods count, services don't, even though services sometimes are what they're needing more. So that's unfortunately the IRS just hasn't kind of caught up with the way things get done.
Okay, so if I have a product that I sell and I'm giving that away, I can deduct the product that I'm giving away.
Absolutely. Yeah.
And
So if you gave a bunch of food to a food bank because you're a catering company and you know your 3 jobs got canceled and you're like, I cannot do anything with this, you take it to your food bank, you can actually get a deduction for that.
awesome. Okay,
Yeah.
so it's the in these times, it's keep track of what you give to 501c3s, and keep track of goods that you give away, and yeah.
Yeah, and most of the charities are really good about knowing that they have to write a letter to you, and certain levels have different kinds of letters that you need and things like that. But the charities keep up on that. And if you are a catering company and you come down with a bunch of food and you give that away, they're going to know to give you a letter, and you definitely want to hold on to that letter because that's actually something that you need at tax time.
Wonderful. Okay. Well, that concludes my list of questions. Are we inspired to share any other nuggets of wisdom? Maybe even not on taxes. Maybe you have a hand sanitizer formula.
DIY recipes.
Space for that. Yeah, wash your hands. That's my advice. Don't blame the cul-de-sac.
Yeah, nothing. I mean, people are trying to operate business as usual, but, you know, make sure you're taking your time to process things and slow down if you need to, you know, take an afternoon off. Most definitely. Your work will be there in the morning. And reach out to people. We're all a little lonely, so.
Great.
I think even those of us that work at home, it's weird not
Oh, yeah.
being able to then, when you're done with work, go out. We would go out sometimes and have drink or whatever, and now we just stay around all the time, and that's a little bit different. So I did this morning have coffee over a Zoom call like this with somebody that I don't normally see, because I'm like, I just feel like I'm missing everybody, and it's just weird. It's just a little bit different. So definitely reach out.
Awesome. Well, thank you all for reaching out to the community and sharing your time and your knowledge. Yeah, let's wave goodbye to everybody.
Thanks, everyone.